Greg and I wanted to start somewhere a little personal. You can see some of it on the right behind us. I've always liked art. There's a little art here, a little art in the back. I put real money into it over the years, and I've always sort of taken for granted that art has some kind of value, not just as something nice to look at, as some kind of a store of value, maybe more than furniture. If I owned a Monet, I would assume it's worth real money, and I'm assuming it'd still be worth real money 50 years from now. Same with a Warhol to me. And I think a lot of people in my generation, these are serious, like legitimate assets to own.
That's right, unquestionably. Meanwhile, I think people, when our generation, when they look at Bitcoin, the most common reaction is something along the lines of, well, I don't trust it. There's no cash flow. What's actually backing it? It's not something I feel comfortable.
That's right. I mean, I own Bitcoin and I've said that very thing myself.
And you and I have actually been talking about this for months about whether that contrast we draw between, let's say, art and Bitcoin is as clean as we think it is, whether the assumption that art is a safe store of value and Bitcoin is speculative. Does that really hold up under scrutiny, or is it really worth taking a deeper look?
Yeah, and I think it's funny because there was this great Wall Street Journal piece that just came out recently, and put some real data behind what we've been arguing for a while.
Yeah. So let's walk through it. And just quick note up front. I mean, this is not a recommendation of either asset. It's really a thought piece that we think, more people should talk about.
Okay, let's lay out the parallel.
Art and Bitcoin actually have a lot in common as financial assets. Neither one produces any cash flow. Neither has earnings, dividends, or coupons, and neither really has an objective intrinsic value. The price of each one ultimately is what the next buyer is willing to pay.
Yeah, and each one has a clear non-financial benefit that the other doesn't. Art, you can sort of hang it on the wall and you get to enjoy it. Bitcoin is incredibly easy to move around and store. Simple.
Different utilities, sure, but on the financial side, the case for owning either one really rests on a similar foundation, which is belief, cultural agreement, a track record of people paying real money for it.
Yeah, and what you've been saying for a while now is that our generation doesn't apply the same skepticism to both things, only to Bitcoin.
That's exactly true. We look at Bitcoin and we say, what's holding this up? This is just a fad, but we're holding art on our walls for decades on essentially the same answer, belief, tradition, the conviction that the next generation will value it the same way we do.
Yeah, and the Wall Street Journal data this week suggests that the conviction might be on shakier ground than I've assumed, which is a reminder things can and will change.
That's very true. So let's maybe walk through the numbers. So per the Wall Street Journal, citing the Art Basel and the UBS art market report, global art sales have actually gone about sideways now for 15 years. The market was around 63 billion in 2011, and it's around 58 billion now. So kind of flat-ish, despite this being one of the largest wealth creation periods in history.
Yeah, that alone is pretty striking when you think about how much wealth has been created in that same window. I mean, so much wealth has been created in that window.
And the Wall Street Journal also reports, citing data from Bank of America and Art Tactic, that artworks auctioned in the U.S. in 2025, bought within the prior 5 years, actually lost about 5.7% of their value annually on average.
5.7% annually on the way down.
And the reporting also notes that collectors need to hold art for a minimum of 10 years on average just to break even. And that's before costs, insurance, seller's commission, and the higher capital gain tax rate that art is subject to in the U.S. compared to equities.
And then there's the headline number.
Per the Wall Street Journal, again, VR Tactic, the value of Andy Warhol paintings sold at auction last year was 85% below 2022 levels, 85%. Now, that's one of the most blue chip names in post-war art. That's not a footnote. That's a signal. There may be obviously nuances in the data, but that's a data point that we take notice of.
Yeah. And what's kind of interesting, it was a great article, by the way. And the Wall Street Journal also gets into why it's happening, which is the part I think this is why we're having this conversation. I think it really matters.
The piece that they note, and this is really, as Pat says, what we're highlighting is the art market might have become, quote, too reliant on baby boomer collectors who are past their peak buying years. And the article points out that younger collectors are gravitating towards different artists entirely. Not the post-war names that the boomers paid eye-watering prices for.
Yeah, the Wall Street Journal writer puts it directly. Art collectors face a unique risk on other asset owners don't. Younger buyers might not have the same taste as their elders. There's nobody to buy this stuff.
Now, hold that sentence next to the Bitcoin question And the skepticism our generation has about Bitcoin is essentially, what if the next generation doesn't believe in the thing the way the people promoting it do?
Right. And the Wall Street Journal is pointing out this exact risk in art, where I never thought to ask that question.
Meanwhile, the next generation, the one, our generation worries won't show up to buy our art, is broadly speaking far more comfortable than we are with Bitcoin.
Right, which doesn't mean Bitcoin is right. We're not saying that. It means that the assumptions I've made about which asset is the safe cultural store of value and which one is a speculative one, those assumptions might be more arbitrary than I've admitted.
I'll just say one anecdote that really, I think, brought it to light. I remember one of our very young clients was talking about a 60/40 portfolio, and we said, "Well, why would you want to have 40% in fixed income? You're so young." And he says, "Fixed income, 60/40, 60% Bitcoin, 40% Ether."
Yeah.
So that really shows there's a different mindset among the next generation.
It totally is. And if you look at the demographics, our generation and those younger than us are going to inherit literally just an incredible amount of money the next 20 years. And one needs to really think a little bit about, where are those people going to allocate? What are they going to sell? What are they going to buy? Yeah, that's right. And I would argue you have to look at what each generation, or Generation X, and the generations behind us, what do they value? What do they look at? And it's something that we're doing here. We're really thinking about this. One of the reasons we do think it makes some sense to own a little bit of Bitcoin in portfolios is these younger people are going to inherit all this wealth and they're going to buy Bitcoin.
That's right. And so, again, this isn't a recommendation, but it's a thought piece, and we think it's one that's worth bringing up. It's a reminder, when our generation says Bitcoin doesn't have anything backing it, we should be honest that the same statement applies to a lot of things that don't generate cash flow,
Yeah.
including the art on our walls. And the distinction we draw between the two might be less about the assets themselves and more about what we grew up around and feel comfortable with.
Thank you very much for listening. If you like this, please like and subscribe and get aligned.